Welcome and good morning to today's Zoom trade along session. We're getting all set up here on the trading floor. Wanted to welcome those that are coming in as guests and also those that are a subscriber. We are showing 3 charts in a separate chart window, 2 time frames for the S&P 500 E-mini and a 30-year bond chart. If you like what we're doing here, tell your friends on social media. I just fixed the link, zoomtradealong.com. We are here every trading day, focused on trading and scalping the S&P 500 E-mini from an educational point of view. This service is broken up into separate pieces. First one is guests. Welcome guests. As a guest, you get to come in, kick the tires a little bit, and then we ask you to quickly sign up for our friends and family offer, which I'm giving out to everybody now. That's coming out in the chat area. If you haven't signed up, sign up. Yep, that's out to everybody now. Just make sure you click on the link. It's through PayPal. It's very easy to do. The rate here is $379 a month. Right now it's on super discount at $100 a month. So if you're on the fence, get off the fence, join us on a daily basis. Become what I call a trading winner. The opportunity to be a friends and family member, you're able to join here, come into Zoom. You receive Saul's commentary during the morning session. You'll receive Saul's proprietary scalping levels, the levels he uses in his own trading. And then Saul will be your wingman from an educational point of view during the morning session as you are applying, trading, interacting around Saul's levels and zones. Saul is an active trader. He's a CME Group floor member. He cut his teeth on the trading floor, the trading pits in Chicago. That is a very big deal. To survive and excel, in my humble opinion, up against the best traders in the world is a very big deal. He is here providing you an opportunity to do better based on your trading, to focus better. What Saul does in his own trading, and we'll do the TikTok. Saul comes in to his charts right around this time. It's 9:24. Right before the cash open. The cash opens at 9:30. He'll go to his screens and he'll set a trading advantage for himself, which are his scalping levels and scalping zones for this morning session. He will give those out to everybody in audio. He will let the cash market open. He will assess today's trade based on a discipline, his trading, his price action trading discipline. He'll read the trade action of this morning session, and he will do a risk assessment and an adjustment for his own trading, and you can do the same. You can ask questions of Saul as he is going about his trading business. He'll highlight, talk about, interact in and around those levels. And this is your opportunity, based on your own trading skill, to be able to receive better levels. And what we say here is better levels equal better trades. And you can witness these levels for yourself. He's going to give you out a pivot price and other levels on top and bottom of that pivot. It's very interesting because his levels are the levels that he's using based on his trade. He calls them levels and zones because things happen based on the reality of price change during the morning session, and he utilizes that as an opportunity to make money. In other words, how do you trade better than the other fellow or the other person or the other guy or the other gal and take their money and don't let them take your money? Saul does that by being nimble. He does that by being aware. He does that by laying out a roadmap for himself, which you can do the same. during the morning session by receiving Saul's levels, his zones, listening to his commentary, asking him questions, interacting with him based on the trade. Spending a little time listening to his dialogue from a wingman perspective. Very good, very opportunistic for you. And it's a great way to really focus and learn to develop consistent profitability based on your own trading technique. Let's take that one step further. If you want to learn Saul's technique, he has a class. So join his friends and family. If you decide you want to learn his price action trading technique, then we can help you out with that. I'm going to post this in the link to sign up for his friends and family in there. We know who hasn't signed up. We know who has signed up. So take the time to get it done today. And I'm going to come off. Sal's going to come in and have a great, profitable trading morning and follow up and ask us how we can help you. Let us know how we can help you, excuse me.
Contract. We kind of flipped over yesterday. They turned. Today we are going to. Our pivot this morning is 4503. 4503. Resistance at 07, 13, 20, and 25. Support below at 44.98, 93, 87, 81. Pivot 03, support at 98, 93, 87, and 81. Resistance on the upside at 07, 13, 20, and 25. As the market opens up here, rotating after those little bit of a sell-off yesterday. It came down right to, we had the 85 area there yesterday afternoon, and it went right down there and then hung there for a bit, and then I rotated back up here overnight, and then very, very narrow ranges here overnight. So, dial down your expectations just a little bit, as you never know what's going to happen or not going to happen. But we have to always be ready. We gave you our levels here. Welcome to some of the new folks that are here. We are trading mini S&Ps. We're trying to take advantage of ebbs and flows of the market because we don't believe markets go straight up or straight down. Consequently, we're looking for those inflection points to give us an opportunity to scalp the market. And those areas that we give out are the levels. And then in addition to the levels, we have price action opportunities that occur. So using the combination of both the levels that we gave out plus the price action opportunities gives us our setups to be able to trade as the market quickly comes up here to the 07 area. Again, if it's a little bit too close to the opening and the volatility is injected quickly, you might want to wait a little bit and see what happens after that. Otherwise, if you're more aggressive, everybody has got different levels of aggressiveness in regards to trading. Not everybody trades the same way. You always got to remember that. And so you have to find the opportunities, the setups that obviously make you comfortable as a trader, not somebody else. So you have to find those opportunities for yourself, trade them accordingly, and that's what we try to show you and teach you in our education course: how to handle risk, how to anticipate it, and how to handle it once you get into a trade, how to work a trade, et cetera, et cetera. So there's different levels, and obviously everybody trades at a different price risk tolerance. So we try to work with each individual basis. All right, that's where we're at. We're testing this 07 area here. Market's kind of said what it wants to do up here. Again, the market is Nice rotation here. Yesterday they kind of sold off a little bit in the afternoon, and then quickly have come back and pretty much got back all its losses from yesterday afternoon as they went and retested the low from the overnight low, basically, and then come right back up. So you never know what's going to happen. That happened like right in the afternoon, late afternoon, when that break happened, and the break gave us a good opportunity to trade at those levels on the downside that we had. As the market continues to slowly uptick, the next level of resistance we have is up at 13. So if anybody has any questions, please feel free to put them in the chat box area, and we'll see what the day brings. As we just don't try to anticipate anything. We're always coming in with fresh eyes and fresh ideas. Whatever the market's going to trade that day, that's what we're going to try to figure out. We don't know if there's going to be volatility or not. We don't know if it's going to rally or break. We don't know if it's going to. We just have to take each day as it comes and trade it accordingly. So let's see what it wants to do. Again, some of you don't like to trade that first couple bars because of the extra volatility, as the market is very relatively slow. As you can see, they created a lot of value here overnight, and I just going nowhere fast here. As kind of working this 07 area here. Let's try to see what it wants to do. Is definitely giving you a chance to scratch some of it if you haven't. If you didn't get stopped out, maybe you took the upper end of the range only because of the closeness to the opening when it came and tested it right away. And again, there's different ways of, like I said, handling levels and trading the levels, and you have to take what the market is telling you. Kind of rotating here a little bit off of, I got up to 9 and change. All right, kind of slowly rotating down here. VIX is at 17. That's it's okay. It's not the worst. Yesterday's break, the VIX was almost at 19. So you can tell every time they rally, the VIX, the index, volatility index, creeps up a little bit as we're getting a nice rotation here against our level here at 7, giving us at least 3 points here. Again, being patient, trying to see what the market is going to give us. It gives us an opportunity to make a little bit of money on these trades that we have. Again, we're looking for 2 to 3 point stops. So we got right up to, well, depending on how you scaled in. If you scaled in a point above and below, you didn't really take that much heat on it. And a nice rotation coming back down here to our pivot. If you are short here, you want to cover them right around here and then see what it wants to do. I don't know which way it's going to go. All I know is I can trade the opportunities that presents itself to us and then go from there. So there's a nice little trade there against our 07. Obviously, had to take a little bit of heat against that level, but the market did rotate here nicely off of that. For that 07 area, kind of like I said, I'd cover them right down here at our pivot area. And again, if anybody has any questions, please feel free to ask them in the chat box area as I have that window up. I'll be able to see them and answer them for you. And to welcome some new folks. We're trading mini S&Ps, scalping opportunities, whatever opportunities the market might present itself to us with. as we're basically coming back down here to the range we were at all morning. Hmm. That's a good question there, Parth. The situation in Canada is a little bit different than the United States. Canada doesn't have too many brokerage houses that trade futures. Unfortunately, uh, there's only uh, one or two brokerage houses in Canada that allow you to trade futures contracts. So I can't I don't know who they are or what they are. I just know that it is a situation in Canada that has always been there, and it's always a tough uh, question to answer. But I do know that there is only one, I think, one or two, and that was a while ago. That trade or allow you to trade in Canada. I don't know which firms they are though, so I can't. Sorry about that. I can't help you out that much. My market continues to rotate back down here. We got a little support at the 98 area. Well, I mean, what I recommend, and what because you live in Canada, it's a little bit of an issue. So most of the firms in the United States, once you give them your Canadian address, will not do any business because there's too many regulatory issues that have to be gone through. But you know, there's all the big brokerage firms now. IB trades futures. I mean, that's the biggest one that that everybody likes to use. But I use a more local. I use a local brokerage firm that is from Chicago because they've been doing futures forever. So that's the one that I use. But again, I know that for a fact that if even if you jump in with a U.S. firm, and once you give them your address in Canada, then they balk about helping. I've had a couple Canadian clients, so there's a little bit of an issue there. And if anybody here is from Canada and knows if you're trading and you know which firm in Canada that allows you to trade futures, let us know. Tom, you don't have to raise your hand. You can just ask any question you want. Put it in the chat box area. As the market's kind of just fluttering back and forth here. Again, Tom, you can welcome. You can ask any question you want just in the chat box area. Nobody has to raise their hand around here. Just type in your question in the chat box area and try to answer it for you. Or comments or whatever it is. Right, the market is drifting a little bit lower. We got support down at the 98 area. And nice rotation against our 07 resistance. If you are still trying to stay short, nice little trade there. Just trying to take advantage of ebbs and flows in the market. Would be starting capital. They usually are looking for about 5 to 10,000. Most firms, I would think, and to give yourself a fair chance, I think that would be probably a good amount. In addition to some good education, I mean, it's one thing to put money in your account and start trading. It's another thing to at least have an idea of what you're looking at when you start trading futures. So. What is the maybe Brad can help you out there if I don't have that. I don't. I don't know if it's a phone number, or if it's a login. But on your phone, but I don't have that answer for you.
Hey, Tom, there's a dial in, but I think we have to pick either dial in or computer audio when we set up the Zoom. I can look into it for you. You having an issue? I mean, can you hear us now?
Do I recommend trading micros if you have a smaller account? Well, only if you're if they don't rip you off on the brokerage fees. Uh, if they're going to charge you the same amount of money that they're going to charge you trading a regular contract, e-mini, then I would say not. But if you can get, uh, I mean, it's 1/10 of the size. They're not gonna charge you 1/10 of the cost for brokerage fees. That's the only issue. But if you can find it for, I don't know, maybe $1 round turn, I don't know if that's doable or not. But if you can find it for a small amount of money on your contract, and how much you're going to charge you per contract, yeah, maybe it's doable. But you know, it's one of those things where. Only if it's only if they're not going to charge you an arm and a leg for brokerage fees. I don't know if anybody will charge you $1 going in a round turn for minis. But if you can find somebody that does that, I think that it's worth it. Otherwise, you almost have to. I mean, you could say that if you want to practice, you can use the e-minis. 59 cents per side. Yeah, well, again, that's right on the borderline. That's not too bad. And if it's if you want to, so is $1.18, $1.20 a trip. Yeah, I mean, you could try. Again, you're going to spend if you make 2 points on a trade, then you're making $10, right? As we're coming down here to a 98th, by the way, just in case you thought I wasn't looking. You're going to spend $10. You're going to make $10, and you spend $1.18 or $1.20 on a. So you're spending about 12% on commissions. That's kind of tough to, what I'm saying? Just the numbers just kind of almost don't add up almost. And here, if you trade a regular contract, you make $100 and you trade it, and let's say you pay $4 a round trip, you're paying 4%. You see the numbers? The numbers just don't add up, Anyway, but that's all I'm saying is that it's a little bit. It's hard. The e-minis are great. I guess if you're learning, but the cost of trading it, even if it's small, minimal, is still a bigger percentage than if you were trading an e-mini, a regular mini contract instead of a micro. That's all I'm saying. It's just a numbers game. Is it good to learn? Probably. I wouldn't say no, but are you going to make money on it? Probably not really. I don't mean to be, rude or nothing about it. I'm just saying that the numbers just, even at $1.20 a trip, it's 12% of your, you know, deal versus 4%. So that's a big difference. You know what I'm saying? So it is what it is. You have to, as long as you understand the risk, then you have to make decisions on your own. So if you want to learn there, it's probably okay. So I'm just saying, just putting it out there for everybody, and then you have to make decisions on your own. That's all I can say. All right, so we coming down here to the 98 area now. Obviously, dipped a little bit lower as today we're kind of rolling over, trading D's contract, and just giving you just kind of hanging here, coming back. we're not perfect today. Not as long as usually, we're having to take a little bit of heat. It's giving you a chance to scratch some of them when they come right back up. So that's always an option, right? What is the correlation between the ZB, which is a 30-year bond, and the minis contract, or the S&Ps? Well, obviously the correlation between financials and equities are always there. The financial market is, I think will lead the way eventually with the S&Ps. I mean, there's always a way to look at S&Ps and at bonds, and that's so we kind of keep those up there. Sometimes we get a direct relationship with them, sometimes we don't. Sometimes we get an inverse relationship with them, sometimes we don't. The reason that I have it up there is simply because I used to trade bonds, and I just want to have them up there. And sometimes we are going to get a rotation one way or the other in regards to which way S&Ps might be trading. Not every time. It could be an inverse relationship, could be the same way relationship, but whatever. We might sometimes get a correlation between S&Ps and bond market, so we have it up there. But only because we used to trade bonds here in the room, and then the bond market after the financial crisis became a little bit harder to maintain because basically the government is getting control over the bond market with all the bond buying they're doing. So it doesn't trade as well technically as it used to. S&P, so we shifted over to minis because the mini contract trades a little bit well. Trades technically well as compared to the bond market, which used to trade technically well before the government decided to jump in and do everything that they're doing these days. All right, market again gave you a chance to exit, and now it's coming down here to our 93 area, getting a little bit of a rotation here. You can see that this is, again, there's more volatility once the market kind of opens up, starts trading, and that's what's going on here. We don't know which way it's going to go. It's kind of hard to say that we wanted to get short. We could have had a chance to get short there against our upside level there, and now it's kind of just continuing to sell off here a little bit. Again, coming back up here, where the market's only giving us a chance to make a little bit, or even just scratch our trades. Not even giving us a chance to make any really good money on this, except for our upside level there at 07. Again, just keep your stops in place. We never know when there's going to be extra volatility that's injected into the market and for what reason. All we can do is trade the market on whatever those market conditions are giving us any given moment in time. And so we kind of drifted quickly down here, down to 90, and now coming back up here a little bit. Again, just make sure you keep your stops in place. Very important to do that. Don't want to get caught up in any one of these moves on the wrong side for no reason, not have a chance to make money on the next opportunity. Next, we're coming quickly down here to the 87 area. All right, if anybody has any questions, feel free to ask in the chat box area. Obviously, we got stopped out here of this 93 area. And that market, again, has got a little bit heavy here over the last, 20 minutes off of those highs. Come right off really quick. Like I said, the only thing we're doing is giving us a chance to scratch some of these trades, not really do anything. Not really do anything as far as a good opportunity to make money on the lower end. But obviously, the '07 worked very nicely for us. And now we just kind of breaking down. If I knew we were going to break down, 10, 15 points, I would have told you to hang on to them. But who knew? Who knew? All right, let's see here. He is under a little bit of pressure there, Don. I have no idea why. I think just kind of continuation break from yesterday. Obviously, the eve of 9/11 is today. A lot of stuff going on today in commemoration of it. All right, market continues to show a little bit of weakness right now. We've got resistance back around the 98 area. And anybody has any questions, feel free to put them in the chat box here. We are trading mini S&Ps. Can we repeat the levels in the chat box area for us, for those of you who might have come in a little bit late? See if we can get them up there for you. I'll repeat the levels if we can't. There they are. Thanks, Glenn. All right, market just kind of hanging here, 98, little resistance. A lot of weakness coming to market. We're still up on the day, except they're just taking some profits probably. And a lot of talk about what's going on with and the inflation numbers were bad this morning. So, see what that brings. We have a small number coming out here at 9 o'clock in about a minute and a half or so. Wholesale inventories, not really a big market mover. But the inflation number was out this morning, which was relatively not really a good number, and that's why I was surprised we were even up that high. But again, I'm not trying to. I don't like to come in with an opinion and trade it. So, but they did break it off of that number, and inflation continues to be a hot topic of conversation for when they're going to increase rates. But as you can see here, the bond market's really not doing anything. There's 163 handle. So as far as yields are concerned, they're not really moving that much, even though there are these inflation, I guess, fears in the market, which is not going away. Let's put it that way. Transitory or not, that's what the Fed is saying, but it doesn't seem like they're going anywhere fast. So they're going to, so it seems like they're going to have to make some kind of decision at some point, I think. So the market, I think, is reacting to that. Well, it was positive, but really didn't really do anything till more traders came in and started trading. And that's why we always wait for the 8:30 start of the market before we get too caught up in trying to trade that stuff overnight, because you can see nothing really much happened overnight. Especially they kind of discounted that news at 7:30 when it came out. So we're a little bit weak, staying weak, a little resistance up around the 98 area. Next support level we have is down at the 87, but again, be a little bit careful. We did get down to 89. So let me give you a couple levels here below 81. We have 87, then 81, and then we have 74, 68, and 59. 74, 68, and 59 here below the 81. As the market continues to downtick here, coming down here to the 87 area. All right, well, if you did jump in there, it's scaled in there around 88. You got a nice little fill there, nice rotation. Again, how you scale in is an individualized situation. Not everybody does it the same way, and which is fine. That's it. We did have this little number that came out here right at 9 o'clock. Maybe rotated here a little bit. Maybe you're just looking for a reason to rotate. There are the new numbers. If you look at the chat box area that we just gave out, in addition to the ones we gave out this morning, we had to add some. Again, we are always at the mercy of the market. The levels are there to kind of guide us along the way here, but we're not always going to be. We don't know which way markets are going, so we give you levels, and sometimes we have to tweak them, adjust them a little bit. In this case, add to them a little, and even those you have to take each opportunity when they come and look at the price action and act accordingly. Continues to show a lot of weakness here, quickly drifting down here a little bit. Again, if you just missed out on the entry point, maybe you adjust it a little bit. Remember, we got down to 87 and change, so maybe you adjusted to the lower end here and got filled, and now we're rotating back up here. Again, just making a little bit of an adjustment based on the price action helps us stay in the game a little bit, and you're also taking your lead from what's going on in the market. As we're always taking our lead from what's going on in the market, we don't try to make stuff up. We have to adjust to the market conditions. So if you didn't get filled there at the 87 change when it got down there, if you scaled in different, you had to make a little bit of an adjustment to the downside. If you did, then you were able to stay in this and get a better fill and hopefully a better rotation up here. As we did get down to 85 and change. All right, we have really opened up the floodgates here this morning. Quickly coming down here, we got 81, our next support level. We're looking at the 81 area next. And we'll see what happens there. And then we gave you levels before, like if you look at the chat box here, you'll see the new levels in there. We did get down right to the opening at 83. Came back off here a little bit. Maybe if you're a little bit aggressive there, took the 83 area as a settlement price. I had to do both. I know it's kind of tough to jump in there when you see what's going on, but you know, it is one of those quasi levels that we have. And the most important thing when you get in this one-way trade right now and not getting any rotations is to be able to make sure you keep your stops in place. Always important. Let's see here. All right, so we don't have any other numbers coming out, and now we're just kind of just hanging around the settlement price here. Next support level we have is down at 81. We did get down to 81 and a half there. I don't know if you got anybody got filled down there. Right. So Shirley, that's simply because um, they switched over. We switched over to the D's contract. You are looking at the SEP contract, the September contract, but yesterday they rolled over from the SEP to the D's, and today we are trading the D's contract. No problem. I'm glad you asked. Okay, we're coming down here to the 81 area. Nice rotation here off of the 81 area. We always got to make sure we are ready to take advantage of the next opportunity when it presents itself. That's why we are keeping our stops in place and then putting your orders in there and just letting the market kind of do its thing. We're not always going to make money on our trades. That's a given. That's why we have our stops in place. Like I said, a lot of trades this on this move here, we were getting in, and the market wasn't running away from us, but giving us a chance to get out for a little loss or a scratch because we weren't getting a reaction we were looking for around the level initially. And so consequently, we had to trade literally and make decisions quickly. And sometimes, you don't have to, you don't have to wait till you get stopped out is the point. You have a choice here as to watching what the market is doing and then take it, and then trade it accordingly. All right, so nice rotation there off of our 81 area. Hopefully you were able to take advantage of that. It got right down to 1.25 and bounced up depending on how you scale in. Right, it's always a personal situation when you scale in and how you get in. We're not going to be perfect, obviously. So where you got in depends on what your risk tolerances are and how you scale in around an area. And if you had 81 straight up, or if you adjusted lower and you didn't get it, that's okay. Probably you have a little secondary support on there. Maybe you can lower it a little bit, or understand that we did get filled at 81 basically, and it becomes a lot more risky. So you have to make that decision on your own as to what you're going to, how you're going to work that area in case you didn't get filled. And basically, we kind of did get filled around that area. That's because your entry point wasn't where we had it, doesn't mean that the level didn't work initially. We'll say that the producer price number was really bad number. That's all I can say. Kind of blew away all the whatever expectations they were looking for. Kind of blew them all away. Problem is how is the Fed going to deal with that? I think kind of the market got a little bit nervous there once we opened up, and like I said, I was a little surprised where we opened up, but what are you going to do? Well, rotation, we're looking for a bounce off of our levels, depending on if you're short or long. And so sometimes we get a quicker rotation off of a level. Sometimes we have to work an area where we're not getting the rotation we're looking for, but it's not running away from us. So you have a choice as to how you work a trade once you're in it. So rotation, we're looking at rotation is a bounce off of a certain area that we have, maybe support level or resistance area. Like we did bounce off of our '07 above, rotated off of that level. And then we've been looking for rotation here against one of our support levels. We haven't really been getting strong rotations, but then we've been stopped out of one or two, and then scratched maybe, and then maybe took a little profit on some other ones. But we've had to work the areas on the downside just because the market has been going quickly down, not giving us opportunities for any rotations off of those levels. We don't always, Harold. We're not always looking for counter trend trades. I think that's what you're asking. We are looking. We did. We have to have the market set us up for any kind of momentum trade. Yesterday in the afternoon, we had a couple momentum trades that we went with the market. Right now, we need to have the market set us up for any momentum trade. If you would have told me that we were going to break and continue breaking, if we were short at '07 area above, and I was looking, we covered them maybe around our pivot there, which would have been a nice trade. And then the market continued to go down. So we needed to find another area where we could have gotten short, but the market really never gave us, from a technical point of view, another area to enter to get short. Doesn't mean that we're always counter trending, but again, we always are trying to find good areas to get in for those uh, opportunities. And right now, there's a lot more momentum in the market, and that's why we are talking about always keeping your stops in place to give us those opportunities. But yes, uh, so again, the downtrend. If you just told me that it was going to break 20 S&P points, I would have told you to stay short from the '07. Unfortunately, I don't think it would. I don't think anybody would have told me that, or else I would have told you to stay short the whole time. And maybe some of you did stay short. I don't know. Against our '07 and just kind of had a trailing stop. That's always a viable trade if you were able to do that. All right, so we've bounced here off of our 81 area. Nice rotation there off of that level. Again, we're keeping our stops in place, so in case we have trades that are not going our way, you can't get caught up in it or let the market get you in a deeper hole, because like I said, we never know what the markets are going to do. So we are finding those areas and trading accordingly. Again, if you're trying to stay long here against our 81 area, you can try to, uh, I would probably say probably about the 80, 9 area would be a good exit strategy if you have a trailing stop. VIX shot up to 18 handle. That's what happens when the market goes down. The volatility comes flying back in the market. All right, so if they're trying to stay long here against the 81, good area would be up at 89 to exit. And again, sometimes like I said, we could get in, and if you trade multiple contracts, you're able to go with the trade and stay with it as long as you can, and take obviously more than 2 or 3 points on the trade on anything left over. As we're getting a nice rotation here off of the 81 opportunity. So even though we do counter trend, if you do get in at a good area, you can obviously go with the trend, and depending on how you manage your trade after that, off of the rotation against our 81 area. But either way, you have to have a trailing stop as you work that order. Yeah, we definitely adjust the. You have to adjust your stops according to volatility. So that would be, right now the volatility probably be about 2 or 3 points. Obviously, if and when volatility picks up, we've had to increase our stops because there's a lot of slippage involved. But yes, we would obviously have to, adjust your stops based on volatility for sure. I think right now 2 to 3 points is a good target, and the volatility kind of gives us good opportunity to trade it and to stay in a trade because we continue to downtick though. I mean, obviously we're going to have to make an adjustments to the stops because I think more volatility is going to come into the market if we continue to rotate to the downside. All right, we are just kind of hovering here. Anything below, I'd say 82, you want to be out of any longs. If you're trying to stay long. Again, if anybody has any questions, please feel free to ask in the chat box area. I have that window up and I'll be able to see your questions. We are here every day trading S&Ps. And sometimes we're going to get opportunities better than others. And that's why we are traders every day. We never know what the day is going to bring. How long do I need to learn setups? Well, I mean, the course that we have is as a work in progress. So we would work with you until you get the setups, understand the levels, understand the price action opportunities. So it's a process. I mean, everybody's different. Nobody's the same here in regards to when you're going to catch on or not. So I can't give you a specific number, but I'd say you got to give yourself a good 6 months of opportunity here before if you can give yourself that much time to be able to understand it, because it's not going to be that easy. The concepts and ideas might be simple, but the execution part of trading is the hard part. How you manage the trade afterwards, how you get into a trade. Even once you recognize the trade, or once you recognize the setup, recognition of the trade is one aspect of it, like I said, and the other aspect is execution. And both of those require a certain amount of time to get used to how to get into, how to find the level of the opportunities and setups, and then how you get into them and how you trade around them. I'd say 6 months is a good time frame for somebody to give himself, yes, or herself. Don't we all wish we knew they're done? All right, we are definitely just bouncing around here, and got a little bit of a range. It could be the opposite of a flagging situation. So maybe we're just going to hang in here. I don't know. Might continue to open the door to the downside. If you are trying to stay short, well, good resistance would be around the 89 area, and then again up at 93. But if you're trying to stay short, any well, again, it's tough to try. Well, hopefully you're staying long here above our 81 with a trailing stop. Maybe it did get stopped out. It got right down to 82 before and it bounced back up. So I don't know if you got stopped out or not. But if you didn't, then you're just seeing what it wants to do, and maybe look for a rotation up here to the 89 area. All right, we're just kind of just hanging here on the downside. Looks like we're still under a little bit of pressure. I think it's not going to start rotating unless we get above 88. We might not be rotating a little bit higher. So I guess I would say that looks like we want to go down here a little bit more. Like I said, we were flagging in reverse. Next support level we have is down at the 74 area. Right, again, so if you're trying to stay long there, now you probably stopped out, or yeah, trailing stopped out. And now let's see what it wants to do down here. We've got next support levels down at 74. Could you stay short? Well, could you gotten short? When I said that they were flagging, that was probably uh, area there where you thought maybe you had to try to find a way to get short there because it seemed like we weren't having a little trouble rallying. It wasn't set up perfectly to tell you where the exit strategy was because we were still in the middle of a band, so that was the only problem there. But the market continues to downtick here, looking at the 74 as the next support level. And it does look like it wants to go down today. Or those hourly bars, it's been a while since we've seen those hourly bars extend that much. So obviously there's some momentum in the market. There's a lot of talk, with the inflation situation is a problem. almost having to like increase our stops here a little bit because of the extra volatility coming down here to our 74 area. Obviously, if you increase your stops, you have to increase your, you know, how you scale in. All right, getting a nice rotation here against our 74 area. It's nice little pop up here against that. Again, you could have definitely gotten in a lot better just because of the volatility that the market it was showing. So, but even if you just scaled in around it, got the lower end, you're getting a nice rotation here against our 74 area. Again, we had to add some levels here because of the volatility that's been injected into the market. Nice rotation here against our 74. Again, just have a trailing stop if you're trying to stay long. If again, but you're also taking profits along the way if you're trading multiple contracts. Just took a little bit of heat there. Did I not look at the volume? What does that mean? Am I not looking at the market either? I mean, of course, I'm looking at the volume. I'm also looking at the volatility. There's a lot of things to look at. All right, nice rotation there against our 74. Again, you can have a trailing stop or make sure you can peel some profits along the way. If you're trading multiple contracts, obviously. So our 81 level worked very nicely there, and now we are coming up here on our 74 level worked very nicely, giving us opportunities to find those inflection points that creates opportunities for us to make a little bit of money off of the volatility that's in the market. We obviously need volatility for us to be able to get these ebbs and flows, but we get ebbs and flows when the market seems to go down versus when the markets go up. The ebbs and flows are not there when the markets slowly rotate to the upside. Even though we get a lot more movement when it's going down, finding the opportunities are a little bit easier to trade when the markets are going down versus when they're going up, as we've talked about that many a time. All right, nice little trade there. Again, if you're going to try to stay long, have a trailing stop. Can't fight the market the way they're doing. We have resistance would be back around the 84 area, and then anything above 88 out of any shorts. All right, so now if we did probably got out of any longs there against our 74, unless if you have a trailing stop. If you're trying to stay short, that's good. I mean, long, that's nice. And let's see how, just make sure you keep your stop in place wherever it's going to be, whether it's break even or whether it's, but it's only on contracts you have left over. All right, nice little bounce off of the 74 area. Now we're coming back down, kind of flat now. And the next level of support we have is down at the 68. So it's a nice little push there against 74. You probably didn't even have to obviously take any heat on that, especially if you scaled in. Again, the most important thing is keeping to your task, right? I mean, understanding that we're not going to be making money at all these opportunities, and you keep your stops in place so that you can are always ready for the next opportunity when it presents itself. The inflation numbers were pretty bad. So I mean, at some point, that's going to be the talk. If we continue to downtick here, that's going to be the talk in the market, I think. But this was a bad PPI number that came out this morning, and yet the market really didn't rotate off of the. When we opened up, we went higher. So it's kind of a little weird. But hey, it is what it is. The market continues to stay a little bit weak here. Next support level I have is down at the 68 area. All right, nice little bounce there against the 74. Got all the way up to 80, and hopefully you had got in a little bit and were able to take some profits along the way, and then have a trailing stop. And probably got filled on your trailing stop, and now we're just kind of coming back down here to the lows. Uh, and see what we want to do next. Now we're coming down here and testing the lows again. Next support level we have is down at the 68 area. Let's give you a little bit some more levels there. We have 68, then 59, and then 52, 44, and 36. In case we really decide to let loose here. So below here, we've got 74, which we had. Then we have 68, 59, 52, 44, and then 36 below the levels we already given out. Again, make sure you keep your stops in place, as the market here is definitely a little edgy here, a little nervous based on the inflation numbers. But again, we're only down 8 S&P points on a day, even though we broke and we're down, I don't know, 30.